Hello everyone, welcome to the 114th episode of me learning how to trade in Forex. So in the last episode we finished off the keeping a trading journal section with summary keeping a trade journal. Your trade journal is a log of all trading activity. There are three elements for sustained successful trading, which is having and executing a good trading plan, having a good trading system as part of that plan, and review and improve your trading performance and plans. Every Forex trader should maintain a journal that focuses on these elements. The journal's objective is to monitor both the performance of your trading system and your ability to execute it with consistency. Just follow the trading plan. Your trading journal is intended to make sure you do that. The trading journal should be an ongoing effort, not just a one-off for the sake of completing an assignment. Be thorough and honest with your journal. Do not shortchange yourself by failing to put in the entries or through incompleteness. Not only that, so you clearly see what you're good at, what you suck at, and what's the best way it is for you to trade. To build the skill of trading, you must have the will to maintain a trading journal. And some final advice for keeping a helpful trading journal: always begin the journal before the trade and end it after the trade. Write down everything, don't leave anything out, be honest, pay very close attention to your emotions and make sure you write them down. Make sure your journal includes observations about you and your trading and about the Forex market. Take a screenshot of intraday charts of each day's action and write comments on them. Nothing's too silly to record inside journal, write it down. Write down whether you missed a trade because you're watching the latest episode of The Crown or playing Call of Duty, or you're busy talking to your sweetheart. Write it all down, so do not miss anything out. And then we finished off doing the quiz. Now we're on to Introduction to MetaTrader 4. So, Introduction to MetaTrader 4. Date is the 23rd. So, Introduction to MetaTrader 4. Congratulations, if you made your way to this lesson, it means that you're now ready to open a demo or live MetaTrader 4 MT4 trading account. And because babypips.com is the bee's knees, we're here to guide you through it. MetaTrader 4. First, you should know that MetaTrader 4 is simply a trading platform used by tons of traders and brokers. So, MetaTrader 4 is a trading platform. Tons of traders and brokers. Traders use it to view real-time currencies. Used by trading platform used by both traders and brokers. So traders use MetaTrader 4 to view real-time currency prices, open or adjust orders, get technical and fundamental analysis. Open or adjust technical orders. Just orders, not technical orders. Open or adjust orders. And get technical and fundamental analysis. Get technical and fundamental analysis. Meanwhile, brokers use the MetaTrader 4 platform to reach a broader audience. Brokers use MetaTrader 4 to reach a broader audience. What's good about the MetaTrader 4 platform is that it offers boatloads of currency pairs and indicators that you can choose from. So MetaTrader 4 offers lots of currency pairs and indicators, indicators to choose from. Not only that, but its customizable charts are so newbie friendly that any 6-year-old kid can spot breakout patterns from it. So in this screenshot we can see the MetaTrader 4. I'm assuming that's the interface. Symbol, bid, ask price, Euro USD H4. I don't know what the H5, or is it per 4 hours, per daily, per 1 hour, per monthly maybe. Is that what it stands for? So USD CHF, EUR USD, GBP USD, USD JPY. We can see some indicators being used here. Some indicators also used here. Not candle charts, but line charts I think they're called, something like that. Got the black and white candle charts, line charts with a moving average in between them, it seems. Orders placed, balance, liquidity, equity, margin, free margin, margin levels, time, type, size, symbol, price, SL, TP, price, commission, swap, profit. I don't know what SL and TP means. Yeah. Mechanical traders can also plug in their EAs into their MetaTrader 4 platform. This makes it easy for them to track trade opportunities. Plug in their EAs. What's EAs? The MetaTrader 4 platform can't be accessed through a website though. You have to install the platform on your computer or your phone before you can gain access to your trades and currency prices. Want to open your account now? Here's how. There's no point watching that because we're not trying to open an account now. We've still got lots of stuff to learn. So I'm just going to skip this video. Step-by-step instructions. Step 1. Set up your MetaTrader 4 account. Download and install MetaTrader4.exe. Carefully fill in the account details. Name, country, state, city, zip code, address, phone, email, account type, currency, leverage, deposit. Step 2. Record your account details. Record and keep a copy of your account login information before exiting the registration process. With MetaTrader 4, you are able to create and access multiple accounts without exiting the program. Please pay attention to which account you are using before placing trades and orders. As much as we like to go forth and make live pips, we highly encourage you to try demo trading first. This way you'll get a feel of the platform without putting any of your hard-earned capital at risk. Besides, unlike in live trading, you can always add to your capital, open a new one if you blow your Besides, unlike in live trade, you can always add to your capital, open a new one if you blow out your account or if your demo account expires. Always demo trade before live trading. Next one. MetaTrader 4 basics, how to set orders. Now that you've set up your MetaTrader 4 account, it's time to learn how to use it. We know with so many tabs, windows and buttons, the MetaTrader 4 platform can look a bit intimidating if it's your first time using it. But don't worry, it won't bite. Besides, we're holding your hand through the entire process and go nice and slow. We'll start with the basics, setting orders. By the time you're done with this lesson, you'll know how to buy or sell via market execution, buy or sell via pending order, modify a trade after it's been entered. Are you ready? Great, let's begin. Entering a trade via market execution.
Hey guys, in our previous video we showed you how to open an MT4 account. This time around we're going to show you the ropes on entering a trade at market using an MT4 platform. Note that this is a little different from setting limit or stop orders, but we'll get into those types of orders in another video. Launch your MT4 platform and click on the New Order button. You will be able to find this around the upper left area in the standard toolbar. A dialog box will then appear. First up, click on the drop-down list beside the symbol option and select the currency pair you want to trade. In this case, let's try pound dollar. Then, click on the box next to type or order type and select instant execution from the drop-down list. Next, go to the box besides volume and enter the size of the position you want to open. Keep in mind that this is expressed in terms of standard lot sizes. Let's say I wish to buy 5,000 units of a certain currency pair, so I'd enter 0.05 in the volume field. After that, determine whether to buy or sell the currency pair and click the corresponding button. In this case, I want to sell pound dollar. A dialog box will appear to confirm that your trade has been executed, then click OK. And that's pretty much it. If you have any questions, you can simply post a comment below or visit the babypips.com forum to ask a trading buddy. Stay tuned for our next video on...
Okay, so click the New Order button, you'll find it in the standard toolbar. Dialog box should appear. From the drop down list, select the currency pair you want to trade. Next, select market execution in the order type drop down list. Enter the size of the position you want to open. Keep in mind that volume, which indicates the size of your position, is expressed in terms of standard lot sizes. Remember, one standard lot is worth 100,000 units. Hence, if you wish to buy 5,000 units of a certain currency pair, you would enter 0.05 in the volume field, because 0.05 times 100,000 is 5,000. If you have any remarks or notes you would like to include about your trade, you can do so in the comment field. This is optional. Finally, determine whether to buy or sell the currency pair. A dialog box will appear to confirm that your trade has been executed. You may have noticed that when you choose to buy or sell a pair at the market, the stop loss and take profit fields may be disabled. Don't worry. These options have only been disabled to help you get in on the trade as fast as possible when price is already moving. You can still specify your exit levels by modifying the trade after it has been entered. We'll teach you all about editing existing orders later on. Alright, entering a trade via pending order.
The first step is to click on New Order button, which we'll find in the standard toolbar. A dialog box should then appear. From the drop-down list, select the currency pair you want to trade. You have the option of putting remarks on your trade. If you would like to do so, just type them in the comment box. Next, select Pending Order in the Order Type drop-down list. Upon clicking, your next course of action is to determine whether you want to buy or sell the pair. You will be presented with 4 options. You would select Buy Limit if you plan on going long at a level lower than market price. You would select Sell Limit if you plan on going short at a level higher than market price. You would select Buy Stop if you plan on going long at a level higher than market price. And you would select Sell Stop if you plan on going short at a level lower than market price. After you selected the type of order, enter the position size you wish to open. Keep in mind, for most MT4 platforms, volume is expressed in terms of standard lot sizes. Hence, if you wish to buy 100,000 units of a certain currency pair, you would enter 1.00 in the volume field. After you've entered the position size, punch in the price at which you would like to enter. Fill in the stop loss and take profit fields if you already know your exit levels. If not, don't worry, you can always enter them after your trade has been executed. I'll teach you how to do so in my next video. Placing a pending order also gives you the option of setting an expiration date. Once you've filled everything out, click the Place button to enter your trade. A dialog box will appear to confirm your trade has been executed. There you have it. Now you know how to enter pending orders on your MT4 platform.
Okay, so click the new order button. From the drop down list, select the currency pair you want to trade. Next, select pending order in the order type drop down list. Determine whether you want to buy or sell the pair in the order type drop down list. You'll be presented with 4 options: buy limit if you plan on going long at a level lower than the market price, sell limit if you plan on going short at a level higher than the market price, buy stop if you plan on going long at a level higher than the market price, sell stop if you plan on going short at a level lower than the market price. After you have selected the type of order, punch in the price at which you wish to enter the market, then enter the size position you want to open in the volume field. Fill in the stop loss and take profit fields. You'll notice that by using a pending order, you'll also have the option to set an expiry date on your order. Once you've filled everything out, click the place button to enter your trades. A dialog box will appear to confirm that trade has been executed. Modifying trades.
I've already talked about entering trades on your MT4 account. This time, I'll discuss how to modify existing orders and trades. The first step is to check your main terminal window. In order to do this, simply click on the Trade tab here in the bottom left area of the platform. You should now be able to view your current positions. The panel also shows other details of your trades such as the entry price, position size, stop loss, and profit target. From here, you can edit your stop losses and profit targets. Right-click on a trade and choose Modify or Delete Order. Next, enter your stop loss and take profit prices. When you're done, just click on the Modify button. A dialog box should then appear to confirm that your request has been executed. There you have it, folks. That's how you edit existing trades.
So click on the Trade tab. There you'll find all of your trades, including their entry prices, position sizes, stop losses, and profit targets. If you don't see the Trade tab, don't worry, it's there. It's just hiding. Go up to the menu bar at the top of the window and click on View, Terminal, or click Ctrl-T on your keyboard. To add/modify stop loss or profit target, right-click on the trade that you want to modify and select Modify or Delete Order option. Next, fill in the stop loss and take profit fields with your desired levels. When you're done, hit the Modify button. A dialog box should appear to confirm that trade adjustments have been executed. To close an open trade, right-click on the trade you wish to close and click the Close Order button option. If you want to close your entire position, select the yellow button below the Buy and Sell options. After hitting close, your profit balance should change and reflect the profit or loss you made on your recent closed trades. Okay. Okay, that was that. Not much notes to be made on these, to be honest. MetaTrader for basics, how to install an EA. So this is the thing they were talking about earlier about EAs. Now that you've had a little bit of practice with the indicator tools that the MetaTrader 4 platform provides, it's time for you to move on to the next stage of your MetaTrader 4 training. How to install an expert advisor. Right, okay. EA equals expert advisor. An expert advisor, otherwise known in the Forex world as an EA, is basically a program that you install onto the platform that will automatically follow a trader's instruction once a certain criterion has been met. Expert advisors Expert advisor is a program which you install onto the trading platform which will automatically follow a trader's instructions once a certain criterion has been met. In a sense, you can call it automated trading, as you don't even have to be touching your mouse and keyboard for orders to be entered. The advantage of using an expert advisor is that if you already have a mechanical system in place, you can create an expert advisor to replicate the actions required once your system gives you a signal. This is particularly useful if you like trading multiple pairs or you just don't have the time to be in front of your computer to trade. But before we get to the part of how to install an expert advisor, be warned that there are many people out there offering expert advisor programs that may not perform as advertised. They will tell you that the expert advisor system has made them thousands of pips without them having to do a thing. We're not saying it's impossible, but unless they show you account statements that are audited by a highly reputable third-party accounting firm, take it with a grain of salt. Do not be fooled by their flashy advertising and promises of higher returns. What would be best is if you create an expert advisor yourself. We won't lie, it ain't particularly easy, you may have to spend some time figuring it out, but hey, if it was easy then everyone would do it, right? We highly encourage you to learn and understand all aspects of whatever expert advisor you plan to use. If the expert advisor is centered around moving averages, make sure you know if it uses simplified or exponential moving averages and how many bars it covers. If it uses stochastics, make sure you know what settings are used to generate the signals. Remember, this is the hard-earned money that you're entrusting to a computer program here. Once you know the ins and outs of the expert advisor, then you can start loading it onto the terminal.
Hey guys, in this video I'll be teaching you how to install an expert advisor or EA on your MC4 platform. This tutorial should be very useful for those who have created an EA program to automatically give signals or execute trades based on their system. First up, go to the folder where your expert advisor program is located or downloaded. It could be in your downloads folder or in a specified folder under documents. In my case, it's right on my desktop, so I'll just grab the EA right there. Next, I'll transfer these files to my MetaTrader 4 folder, which is located in my computer's C drive. Under Program Files, just look for your MetaTrader folder.
Well, this video is really old. Look at this, it's like Windows 95 or something.
Which could include the broker's name and the folder name. In my case, it's simply MetaTrader 4. Go to the Experts folder and then just paste the EA right there. A pop-up requesting admin permissions may appear. If so, click Continue. And there you have it. The EA is now in their respective folders and you can install them in your MT4 platform. Now go back and launch your MT4 platform. On your platform screen, look for the Expert Advisor section under the Navigator pane at the left side of your platform. Click on the plus sign beside it, and available EAs will now be listed. Now click and drag on the EA that you want to install on the main chart on the platform. If you did that correctly, a pop-up box showing your EA settings will appear. Make sure that the settings and alerts are correct before clicking OK. That's it. Simple enough, right? If you have any questions, you can simply post a comment below or visit.
Okay, so step-by-step instructions installing an expert advisor. Step 1. Transferring files. Create or download an expert advisor. Keep note with the location of where you saved it. Select and copy the expert advisor file you wish to install. Look for the MetaTrader 4 folder. This is normally located in the C drive. Paste the files into the experts folder. A window requesting admin permission may appear. If so, just click Continue. Installing Expert Advisor on the MetaTrader 4 platform. Launch your MetaTrader 4 platform. Look for the Expert Advisor section under the Navigator panel at the left side of the platform. Click on the plus sign and the available Expert Advisors should be listed there. Click on the Expert Advisor you want to install and drag it into one of the charts on your platform. Number 3. Adjusting the settings. A pop-up box will appear showing the settings of your Expert Advisor. Make sure that all the settings and alerts are corrected before clicking OK. Once again, let's remind you that you shouldn't just use an expert advisor blindly. Test it out on a demo first and understand everything there is to know before committing your capital to it. Ensure the expert advisor is tested on a demo account before using it in a real account. Ensure the expert advisor is tested on a demo account before using it on a real account. MetaTrader for basics. How to use indicators. Not all trading platforms are created equal. Heck, even MetaTrader 4 platforms aren't all the same. Oh, there's different MetaTrader 4 platforms. Oh, right, okay. They come with different sets of indicators depending on your broker. Some come with just the basics, while others come equipped with all sets of tools and advanced studies to help you with your trading decisions. In a way, that's where the beauty of MetaTrader 4 lies. It's highly customizable. Think of it as the PC of trading platforms. Sorry, Apple fanboys. You can run all sorts of indicators and expert advisors, tweak their settings in almost any way you want, and even create your own from scratch. In this lesson, we're going to get you started on getting the most out of MetaTrader 4. Knowing how to enter and exit trades isn't enough. You have to know how to use your platform's various tools to the fullest, and you have to know how to customize them to your needs. If you ever wondered how the other traders got all those fancy indicators and thingy-majigs on their charts, then this lesson is for you. After watching the video below, you learn how to draw lines in your charts, add indicators, and modify an indicator's parameters. Hang in there, enlightenment is just a 2-minute video away.
I've already taught you the basics of using your MT4 account. Are you ready for more advanced stuff? In this video, I'll talk about how you can add objects and indicators on your platform. You can find the list of chart objects and indicators on the Insert menu located on the toolbars. Now, let's say you wanted to mark off a support level on your chart. Simply find Lines under the drop-down menu and select Horizontal Line. After doing so, you can just click on the area of the chart that you want to keep tabs on. Applying indicators is just as easy. Go back to the Insert menu and hover over Indicators. You will then be presented by a list of indicators that you can use. Just remember that indicators are typically categorized according to their type. In this example, I would have to look for the trend following indicators if I want to use a moving average. After choosing a particular indicator, you'll be prompted to set its parameters, as well as how you want it to look on your chart. When you're done, just click OK and the indicator will automatically appear. Let's try adding another one. Click on Insert and then Indicators. This time around, I'll apply the stochastic indicator, which is an oscillator. I will then set my preferred parameters and click OK. And voila! It's on my chart. If you're unsure about the different kinds of indicators and what parameters you should use, you can learn more about them in the School of Pipsology. That's it for now. Stay tuned for our next video on installing.
Okay, so how to add chart objects. Click on the Insert menu here, choose an object to add to the chart, EX lines, shapes, arrows, Fibonacci, Andrew's pitchfork. Okay, click the chart area where you want the object to appear. How to add indicators. Click on the Insert menu, choose an indicator that you want to add. Indicators are usually grouped according to their type. In this example, the moving average indicator is under the trend following section. So trend, oscillators, volumes, Bill Williams, custom, awesome oscillator, very nice. After choosing an indicator, you will be prompted to set its parameters. You can also edit the indicator's color, line style, and other settings. Click OK once you're done tweaking and the parameters and settings. And now the indicator is good to go. Okay, so nothing that, basically. Nice! What is risk management? So, I think, to be fair, I think the MetaTrader, like how to use MetaTrader for, should be the last like few lessons, because surely risk management should be more important than how to use what's it called? How to use MetaTrader 4. So yeah. Anyways, what is risk management? What is risk management? Risk management is one of the most important topics you'll ever read about trading. Why is it important? Well, we're in the business of making money, and in order to make money, you have to learn how to manage risk, which is potential losses. Ironically, this is one of the most overlooked areas in trading. Many Forex traders are just anxious to get right into trading with no regard for their total account size. They simply determine how much they can stomach to lose in a single trade and hit the trade button. There's a term for this type of investing. It's called gambling. When you trade without risk management rules, you are in fact gambling. You are not looking for the long-term return on your investment. Instead, you are only looking for that jackpot. Risk management rules will not only protect you, but they can make you very profitable in the long run. If you don't believe us and you think that gambling is a way to get rich, then consider this example. People go to Las Vegas all the time to gamble their money in hopes of winning a big jackpot, and in fact many people do win. So how in the world are casinos still making money if many individuals are winning jackpots? The answer is that even though people win jackpots, in the long run casinos are still profitable, because they rake in more money from the people that don't win. This is where the term "the house always wins" comes from. The truth is that casinos are just very rich statisticians. They know that in the long run they will be the ones making the money, not the gamblers. Even if Joe Schmo wins a 100,000 jackpot in a slot machine, the casinos know that there will be hundreds of other gamblers who won't win that jackpot, and the money will go right back into their pockets. This is a classic example of how statisticians, make money over gamblers. Even though both lose money, the statistician, or casino in this case, knows how to control its losses. Essentially, this is how risk management works. If you learn how to control your losses, you have the chance of being profitable. If you learn how to control losses, you have a chance of being profitable. In the end, Forex trading is a numbers game, meaning you have to tilt every little factor in your favour as much as you can. In casinos, the house edge is sometimes only 5% above that of a player, but that 5% is the difference between being a winner and being a loser. You want to be the rich statistician and not the gambler, because in the long run, you want to be the winner in the long run. So how do you become this rich statistician instead of a loser? Keep reading. How much trading capital do you need for Forex trading? It takes money to make money. You need trading capital. Everyone knows that, but how much does one need to get started in Forex trading? The answer largely depends on how you're going to approach your new startup business. First, consider how you're going to be educated. There are many different approaches to learning how to trade. Classes, mentors, on your own, or any combination of the three. While there are many classes and mentors out there willing to teach Forex trading, most will charge a fee. The benefit of this route is that a well-taught class or a great mentor can significantly shorten your learning curve and get you on your way to profitability in a much shorter amount of time compared to doing everything yourself. The downside is the upfront cost for these programs, which can range from a few hundred to a few $1,000s depending on which program you go with. For many of those new to trading, the resources, which is the money required to purchase these programs, are not available. For those of you unable or willing to pony up the cash for education, the good news is that most of the information you need to get started can be found for free on the internet through forums, brokers, articles, and websites like babypips.com. We should all thank Al Gore for inventing the internet. Without him, there would be no babypips.com. As long as you are disciplined and laser focused on learning the markets, your chances of success increase exponentially. You have to be a gung-ho student, if not you end up in the poorhouse. Second, is your approach to the markets going to require special tools such as news feeds or charting software? As a technical Forex trader, most of the charting packages that come with your broker's trading platform are sufficient, and some are actually quite good. For those who need special indicators or better functionality, higher end charting software can start around $100 per month. Damn. So that's like what? 1.2 grand a year minimum? Maybe you're a fundamental trader and you need the news the millisecond it is released, or even before it happens. Won't that be nice? Well, instantaneous and accurate news feeds run from a few hundred to a few $1,000s per month. I didn't even know that was a thing. Again, you can get the complimentary newsfeed from your Forex broker, but for some, that extra second or two can be the difference between a profitable or unprofitable trade. Finally, you need money/capital/funds to trade. Retail. Retail Forex brokers offer minimum account deposits as low as $25, but that doesn't mean you should enter immediately. This is a capitalization mistake which often leads to failure. Losses are part of the game and you need to have enough capital to weather these losses. So how much trading capital do you need? Let's be honest here, if you're consistent and you practice proper risk management techniques and stick to trading micro lots, then you can probably start off with $5,000 to $10,000 in trading capital. It's common knowledge that most businesses fail due to undercapitalization, which is especially true in Forex trading business. So if you're unable to start with a large amount of trading capital that you can afford to lose, be patient, save up and learn to trade the right way until you're financially ready. The starting funds. Ensure you're not capitalized. Save up enough trading capital which you can afford to lose. Save up enough trading capital which you can afford to lose. Save up enough trading capital which you can afford to lose. Until then, learn to trade the right way. Drawdown and maximum drawdown explained. So we know that risk management will bring us money in the long run, and now we like to show you the other side of things. What would happen if you don't use risk management rules? Consider this example. Let's say you have $100,000 and you lose $50,000. What percentage of your account have you lost? The answer is 50%. Simple enough. This is what traders call a drawdown. A drawdown is a reduction of one's capital after a series of losing trades. The reduction of one's capital after a series of losing trades. This is normally calculated by guessing the difference between a relative peak in capital minus a relative trough. By getting the difference between a relative peak in capital minus a relative trough. Traders normally note this down as percentage of their trading account. Traders normally note this down as a percentage of their trading account. So normally noted as a percentage of their trading account. Losing streak. In trading, we are always looking for an edge. That is the whole reason why traders develop systems. A trading system that is 70% profitable sounds like a very good edge to have, but just because your trading system is 70% profitable, does that mean for every 100 trades you make, you will win 7 out of every 10? Not necessarily. How do you know which 70 out of these 100 trades will be winners? The answer is you don't. You could lose the first 30 trades in a row and then win the remaining 70. That would still give you a 70% profitable system, but you have to ask yourself, would you still be in the game if you'd lost 30 trades in a row? True. This is why risk management is so important. No matter what system you use, you will eventually have a losing streak. You'll eventually have a losing streak. Even professional poker players who make their living through poker go through horrible losing streaks, and yet they still end up profitable. The reason is that good poker players practice risk management because they know that they will not win every tournament they play. Instead, they only risk a small percentage of their total bankroll so that they can survive those losing streaks. This is what you must do as a trader. Only risk a small percentage of your total bankroll so you can survive losing streaks. This is what you must do as a trader. Drawdowns are part of trading. The key to being a successful Forex trader is coming up with a trading plan that enables you to withstand these periods of large losses. And part of your trading plan is having risk management rules in place. Must enable you to withstand periods of large losses. Only risk a small percentage of your trading bankroll so that you can survive your losing streaks. Remember that if you practice strict money management rules, you will become the casino, and in the long run you will always win. In the next section, we'll illustrate what happens when you use the proper risk management and when you don't. Some roller coasters. Your trading plan must enable you to withstand periods of large losses. Okay. Yep, that's fine. So, I'm going to leave this episode here then. In the next video, we're going to carry on with risk management with never risk more than 2% per trade. So, thank you all for watching, and I will see you guys in the next video. Goodbye!